Hi Natalie, I've decided to review your assessment as one of my allocated people was not able to submit their work. Thank you for your assessment. I particularly like how you separated out the various lines and provided comments on your work, so it was easy to see some of the calculations and exactly how they were made. It was a bit hard to follow some of your calculations in some aspects. I did think that perhaps there were parts missing in the cash flow statement, and all items of costs and income, such as service costs and staff costs, should be in there as well as the income for service charges and other incomes, such as the benefits, as these should represent cash flows in and out and have an impact on the bank account. The loss on the balance sheet to me should perhaps reflect the loss in cash, although in your statements there wasn't a loss, not the loss on the income statement, as this is reflective of assets in hand, but I could be wrong in my assessment. These are some of the things that we're missing from my assessment of the documents. While I'm not 100% sure it's correct, because I also struggled to put these together, this may need to be considered looking at some of the texts on how these were constructed. Either way, it appears that from your assessment the financial situation is not the best, with a deficit clear on the income statement. There are some possible changes that need to be made in terms of revenue and expenditures to reduce this loss. Your calculations suggest that the organisation was cash flow positive, with an improvement in the amount in the bank account, which is a positive from a financial perspective, as it ensures that the organisation is covered from a liquidity standpoint, being able to cover short-term liabilities. It also shows that the equity is sufficient to cover long-term liability, which is a good thing, given the reliance on those assets, the houses, to make long-term income, and they're core for the business at hand. So one wouldn't want to give them up to cover debts if possible. As with all financial documents, they don't show us why things cost a certain amount, whether these things could be altered, and they don't also show us whether these figures were expected or not. And I guess we also need to consider the context in which they sit. Maybe this organisation has just had a bad year and has previously operated quite positively and can recoup the deficit in the income statement the following year. If we had more information, we would be able to more easily make these assessments, and I suppose with other organisations they might have some assessment of these in their annual statement. Thank you for your work and good luck with the rest of the course.